Yo, what's up guys? Today we are going to be doing a trade recap over today's price action on May 20th, 2026. We took two trades today. We took this short on MES and we took a long on NASDAQ over here. Let me find it. Oh, it's over here. We took this long on NASDAQ. This trade we got a nice little 1 to 1.28, and then on MES I think we had, it was like a 2.75. Yeah, so let's get into it. So on the higher time frame for my daily bias, right, I want to be using the 4-hour time frame to develop my bias, right? So just to get the general idea of where price wants to go. We've been in an uptrend for the past like 3 weeks to a month now. We did have this little pullback though, and we were bearish on Thursday, Friday, and pre-market Sunday. Monday we were also bearish, but I was okay with taking both the longs and shorts now, just because the way these higher time frame uptrends work is we'll have these big moves up and we'll have these little pullbacks, big move, pullback, big move, pullback, and just repeats, big move, pullback. And that's kind of what happens. Even though we're having a bigger pullback here, I'm okay with taking both longs and shorts today. So my next step is to look at the hourly and look for potential draws on liquidity, right? So going into today, I marked out Asia lows, London highs, Asia highs, all that, New York PM session highs, and aside from that, I have my biggest draw on liquidity was this hourly fair value gap right here. This gap, I wanted to see price draw into it and potentially get a long off of it, and that's exactly what happened on NASDAQ. But yeah, so I marked out my key levels on the higher time frames, and let's get into market open, see what price did. So market opened here 9:30. We displaced lower into this hourly fair value gap, and there was actually a trade that I should have taken here. It was this long, but I faded this just because I had something to do in class. I wasn't able to take this. I probably would have taken this just because we swept out the hourly gap, and we had this big old inverse fair value gap right here. We get an inverse off of this close, and I would have entered off of that, and I probably would have stopped my take profit once we formed this SMT, which I'm about to get into. I didn't get to take that setup just because I had something to do in class, but I did catch the short after it. Okay, so let's get into my short that I actually took though. So we swept out this hourly gap, creating an hourly ITL or potential target. We swept off of it, and we had an SMT at New York PM highs because NASDAQ took out Asia highs before ES did. You can see over here. Look, we swept out Asia highs, and I could have taken the trade on NASDAQ. I just preferred to take it on ES just because we had the SMT, and I kind of just wanted to trade MES today. So I took that SMT, and we had a better inverse fair value gap on MES. That's why I also prefer to take it over NASDAQ. So we had the SMT, and at our liquidity area, we pretty much swept that out. And we had two inverse fair value gaps. We had this first one, which is what the one I took off of this candlestick close, and we had this other one right here. So yeah, I took the trade off of this 1 minute inverse. I took it off the 1 minute inverse because there was no inverse on the 5 minute and there wasn't one on the 3 minute, so I had to use the highest time frame available, which was the 1 minute. So I took that inverse. We targeted the sell side liquidity that we generated because of that hourly ITL, and we hit full take profit, and we inversed right after, right? So that's kind of the goal. We hit take profit on this nice 1 to 2.75 RR off of a short. Really nice. I mean, most ICT concepts that people trade involve higher time frame liquidity zones such as Asia highs. We form an SMT, we get our inverse, we target other liquidity zones such as hourly ITLs, and that's kind of the basics of my model, and it's really strong. So yeah, that was my first trade of the day. And then my second trade was actually this leg up on NASDAQ. So let me get into that. So on NASDAQ, let's get into it. So NASDAQ, on ES I took this short, right? But on NASDAQ, we never had this sweep off of this hourly fair value gap until the take profit of our trade, right? Once we swept this hourly fair value gap, I was interested in taking longs. So as soon as my take profit on MES got hit, whenever we got this candlestick close, we hit this hourly fair value gap on NASDAQ, and the next candlestick here at 1014 displaced higher like immensely. Like we inversed two fair value gaps, and we got crazy displacement higher. When I saw this candlestick, I was like, originally I thought it was news because it was all the way up here, but then it kind of pulled back down, and I realized that it was just rejecting off of this hourly fair value gap. But so my entrance was off of that hourly, it was off the hourly fair value gap, off this candlestick close after inversing these 2 1 minute IFVGs, and then I targeted these Asia highs. Even though they were swept already, I still wanted to target that. I could have targeted this 30-minute unmitigated gap that was made during pre-market, and we would have hit take profit, but like I wasn't trying to hold my trade all the way till 11:15. So we got take profit at these Asia highs within the first two candlesticks over here. 2 minutes of price action, hit TP. Got a nice little 1 to 1.28. So yeah, I mean, this is the same idea. We sweep out a higher time frame PD array, which is our hourly fair value gap. We get a rejection off of it with confirmation on the 1 minute inverses, and we want to target a high probability zone where price wants to go. And that's kind of the basics of the strategy. I mean, you want to see your daily buy, you want to get your daily bias, and then you want to see a key level get hit, and you want to see an inverse fair value gap or CISD. And that's, a lot of people think that just the executing part of the trade is the biggest part of trading, but honestly, it's like half of it. You want to make sure your take profit is at a reasonable level and at a high probability level where price wants to go. So take profit could be at a Asia high, London high, unfilled fair value gaps on the higher time frame are very strong, because price just seems to be drawn towards those higher time frame fair value gaps. That's why people use them as their liquidity zones and their take profit zones. So yeah, daily bias, key level, confirmation, take profit. That's the basics of my model. Those are my 2 trades of May 20th, 2026. And yeah, that's pretty much it. I'm done for the day. And yeah, peace. Have a good one.